Hello guys, good evening. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only. And as you know, past profit do not guarantee future results. The forex market is volatile as you take your trade, apply its management. So tomorrow being 8th of December 2025, right? So the hot take for the week, it says the Federal Reserve will have its final monetary policy decision of the year next week. That is this tomorrow, Wednesday, right? Yeah, taking the center stage of the global market, right? FOMC members will also update their economic projections along with rate decision, with the Federal Reserve shutdown preventing any official data past September from being taken into account. Right? So likewise, delay releases in will include job listing up to October and third quarter employment costs, right? So key rate decisions will also be featured by Central Bank of Canada, Switzerland, Australia, Brazil, Turkey. Meanwhile, China will post its November account and both consumers and producers inflation print, right? So in Europe, a busy week for the UK, for the UK will be headlined by its monthly GDP and trade figures, right? In addition to joining Germany and Italy in posting their industrial production up, right? So let's head to the weekly news, right? What we have for the week. So I just gave out the highlight, right? Now let's on Monday it's gonna be JPY's GDP, right? Yeah, and Japanese yen GDP, right? Third quarter, right? Yeah, so Tuesday, Reserve Bank of Australia, right? So they're expected to hold rate, right? And job listing, job openings, right? Yeah, so the job openings, it has to talk about spaces for companies that are open for employment, right? So if this number is greater, yeah, so it might likely affect the dollar positively on the short term, just that particular time, right? To create volatility in the market. But on the long run, yeah, we'll see how the dollar bias will look like. Then on Wednesday, back of Canada, right? Yeah, so they're expected to hold it as well, right? Yeah, take note of this. They're expected to hold rate, right? Yeah, so previous is this and market exposure says 2.25, right? Yeah, and that Wednesday as well, we have interest rate decision, right? And Fed, like we all know, they're expected to cut rate by 25 basis point. You know, we have seen for the past month, right? That they are priced in for rate cut by 87% of cutting rate, right? We also have, the FOMC press statement. You know, whenever there's FOMC meeting, the press statement always accompanies the FOMC decision, right? Because that is when Powell will likely discuss if it's going to be a hawkish rate cut or a dovish rate cut, right? Yeah, so a hawkish rate cut is when they may likely cut rate twice, right? Yeah, but the dovish rate cut just once, right? So we'll likely know if because this what will determine the future of the dollar, right? Not just the rate cut itself, because the rate cut has already been priced in. But this conference, when when press will likely interview Powell, right? Will likely determine if it's gonna be a hawkish rate cut or dovish rate cut. Then Thursday, Swiss National Bank, right, will likely decision. So you can see that the interest rate is 0.00, right? Yeah. So based on interest rate differentials, I don't think I would likely invest my money on Switzerland because uh, I'm going to get 0% interest rate, right? So I can go there and do carry trade, buy from there and come and invest in a country that will give me higher percentage, right? Just imagine dollar that is giving me 3.7% against Swiss franc that is 0.00. That means if you borrow money from here, right, you can invest it in US or economy, and per annum you're going to get 3.7% of that amount, right? So it's a very good trade instead of interest rate differentials, right? Yeah, initial jobless claim, you have to talk about those that fight for unemployment, right? Yes, so the higher the number, the lesser the greater the problem for the economy, right? Yes, so that's just it. Then on Friday, GDP for GBP, right? Yeah, UK's economy, that GDP report, right? So this is just the activities for the week. Now let's head over to fundamentals, right? Now. You can see here, we are saying here that the dollar is going to be bearish, right? So let's take a look at this first. These are the reasons why. First of all, a rate easy means rate cut, right? They're going to cut rate. So probability of their cutting rate on Wednesday is going to be 86%, right? It was 87% before, just some decimal numbers, right? So probability of their cutting rates, which is easing. So they're going to ease monetary policy, right? So which will likely devalue the dollar, right? Yeah, so like what we saw here, that cut rate by 25 basis points. So previously 4%. Now, if you remove 2.5% from the 25 basis point from this, which is roughly 2.5, you get 3.75%, right? So so the cut rate by 25 basis points. It's called basis point without the decimal numbers, right? Yeah. So look at this place. You see exactly what we're trying to talk about. You see you see the figures quite clear from here, right? Just so you can see, right? On December, right? 10. So tomorrow is 10. Today is no. Sorry, on Wednesday is 10, right? Yeah. So they are quarterly by 25 basis points. So you can see, right? Yeah. So with this, it tells you that the dollar will be devalue, I mean the dollar should crash. But you know, the rate cut can be interpreted in two ways. One, if it's a dovish rate cut or if it's a hawkish rate cut, right? Yeah, so a hawkish rate cut is when the rate cut will likely, but there are some things that Paul will say that would likely make the dollar to go up instead of coming down. And there are some things he's going to say that will make the dollar to go down as it is. So rate cut does not mean the currency must be devalued, but it has to be either a hawkish or dovish rate cut. So let's see, right? So market expects Fed to cut rate this week. We have seen it, right? So US yield an advantage over German, Japan, China. China has shrunk drastically. So because of the rate cut, their yield has shrunk drastically. So dollar historically falls into Fed cut. Exactly. So after the cut, it tends to rally, right? It tends to rally. So bears bias is short term, not macro trend reversal. Listen to this very well, right? Yeah, so the risk to view, right? If the Fed tone is hawkish, listen, no, that's what if the Fed tone is hawkish, right? So I said it can be hawkish rate cut or dovish rate cut. If the Fed tone is hawkish, fewer cut projections, USD could rebound sharply. So that's why we'll pay attention to Powell's press conference, right? So it's not about the decision at all. It's just about the press conference. So the press conference will determine if Ford will likely give it a hawkish rate cut or a dovish rate cut, right? I just said so, right? Yeah, then look at it. This week is mostly dollar driven, right? So if Fed cut rate, right, plus dovish language, if what Powell will likely say that okay, they're not going to cut rate just once and exactly. So the dollar might dump major FX pair might rot against dollar might rally. That means GBP USD will rally, Euro USD will rally, Aussie, Kiwi, right? They will likely rally. JPY will rally. But if it's a dovish rate cut, sorry, but if it's a hawkish rate cut, right? That means the dollar will rebound sharply. Right. So if Fed cut but guides few cuts ahead, I don't talk about it like a hawkish rate cut, after this cut, you say that okay, they're likely going to cut more rates, subsequently, like 3 to 4 in 2026, right? It will make the dollar to rebound. But given a dovish language means a language that would likely uh point to us that it might not go further than that. You understand? So it will make the dollar to what? To dump. So the dollar will not rally, right? So that is what you should understand about the hawkish rate cut and the dovish rate cut with respect to or Wednesday FOMC meeting and FOMC press conference. Nevertheless, dollar is what? Bearish. That is what you should know. Dollar is bearish, right? Now, apart from that, so let's take a look at sentiment analysis, like beans, right? So we are staying in a risk on market sentiment. So we are not on a risk off, so we're on a risk on. Then talk about the stock market. Stock market is rallying. Yeah, it broke this level, right? And it did break and retest, right? So we expect as the dollar is going down, we expect the stock market to rally, right? So this is the all-time high, right? Yeah, it's almost close to the all-time high it made a few months back, or few months back, right? Yeah, so we're expecting the dollar to rally as the stock market goes down, right? Yeah, so that is that, right? So let's head over to gold. You know, gold and dollar, they are inversely correlated, right? Or let me say negatively correlated in the sense that whenever gold rallies, gold dollar does, because gold is a hedge against inflation, right? Yeah, so you can see that from here, the gold will be bullish because the dollar is bearish, and we are not on a risk off market sentiment. We are on a risk on. That means everything that has to do with investment are going on where, right? So as the dollar is crashing, I just expect to crash, though gold should be bullish, right? So lower USD and yield, structural support, right? So China continues heavy gold accumulation, right? So gold or global uncertainty and Fed cut fuels demand for gold, right? As dollar is being the Fed cut is fueling demand for gold and global uncertainty, right? So risk, right? It says short-term position is crowded, right? Pullback possible into Fed cut, right? So gold is bullish, right? Yeah, so let's look at JPY index, right? For that, let me just take a look at JPY itself, right? So for me, we're going to be bullish on the JPY, right? You're going to be bullish on neutral to bullish, right? Now look at this. This is very salient. This is very important point. I say JPY rate hike expectations now near 90. Right. Wow, wow, wow. Now look at this. Look at this, right? Yes, strengthens JDB futures fall on growing Bank of Japan rate hike, right? Yeah, the rate hike, right? So you can see Japanese currency rose against the dollar and government bond futures fell after a report that Bank of Japan officials are ready to raise interest rate this month, this December, right? Yeah, and central bank will indicate its the central bank will indicate it will continue to raise rate if the economic outlook is realized, while mainly cautious on how far they will eventually push the rate up, right? So key members of the Prime Minister Senate Takeshi government wouldn't try to stop the Bank of Japan if the decision is raise interest rate this December. So we're expecting rate hike, right? Like what the research I made outside of this said that they're likely cut rate, they're likely going to hike rate 90%. So it's even, why the United States are cutting rate, probably of United States cutting rate is 83%. Japanese are likely hike rate, probably of them hiking rates this month is 90%. That means investors are already priced in for rate hike for Japan, right? So what does that tell us? It tells us that we're expecting back of the yen, the Japanese yen to rally, while all the yen pairs should dump, right? So dollar yen correlation with the US dollar it weakens, right? So JPY gaining macro identity. So back of Japan signaling continues shift away from ultra easing policy. So if Fed isn't dovish enough, USD JPY can rip higher again, right? So exactly. So the Wednesday FOMC meeting, interest rate decision and the press conference would likely tell us a lot of things, right? So I think intervention is off the table because of the rate hike already. So I think intervention pressures are off the tables, right? Yeah. So so because of this, right, investors will be pricing for rate hike. So I think the Japanese yen should be bullish because investors are very priced in. That means they will likely be bullish on the Japanese yen, right? So that means all the yen pairs will become bearish, right? Yeah. So for GBP, right? If dollar is bearish, GBP should be bullish, right? Yeah, GBP should be bullish. So GBP should be bullish. So let's see. Yeah, so bullish for GBP, right? So UK fiscal tightening plus upcoming Bank of England easing, right? Equals for policy miss typical support for stronger currency. So GDP likely improve from third quarter dip, right? So stronger recent price action confirms by fundamental. So dollar weakness will likely strengthen GBP's trend. Likewise, that of euro too, right? So we're expecting euro to rally as well. Euro is going to be bullish as well. So euro benefit as US rate spread narrowly, right? So German data improving, right? Factory order and export strengthening. So euro is the top alternative when dollar weakens. Right, exactly true. So lack of major Eurozone wide data means sentiment can flip fast on rate Fed reaction. So everything depends. It's going to be them on Fed reaction, right? Now look at this. There are some things I really want to talk about this card, right? So for me, card anything to do with dollar card, count me out. I'm not going to be part of it. Honestly, count me out now. Despite the bearish, despite the last week that will produce that will say dollar is going to card going to be bearish, right? But look at the way card dump. Look at the way the dollar went against card, right? Yeah. So back of Canada is really going to hold it, right? Yeah, like we said here, they're likely going to hold it, right? So they're not shifting ground 2.5%, 2.1%. So they are not going to shift ground, they're going to hold it, right? Now, in terms of interest rate differentials, right? The United States economy, the United States, they are likely going to cut rate, right? Yes, it's 6% probability of cutting rate. Why the other hold? So in terms of differentials, the economy that is holding should be stronger than that what cutting, right? So Canada are highly vulnerable to the US economic slowdown, right? Yeah. So the risk, what will happen if this is not very sure? If oil rebound aggressively, CAD can recover sharply. So we're going to keep our ears on news from oil, right? Yes. So, and lastly, Aussie will be bullish, right? Well, we are bullish on Aussie will be bullish, right? So now look at this bullish, strong labor market increasingly seen in the next Reserve Bank of Australia move to hike. Wow, la move to hike rate, Aussie, right? You can see, right? But from here, they are likely going to hold rate. They're not going to hike, right? From the news, they're not going to hike rate, right? So, Aussie highly sensitive to US direction, right? So, falling USD equals stronger Australian dollar, right? Yeah, so you can see the reason why all of this, right? For this, okay? So, for me, we have already seen it already fundamentally. Dollar, the bearish, the dollar, they're likely going to cut rate. Nevertheless, I talked about dovish and hawkish rate cut. So power language will determine where dollar will go, right? Yeah. So when Paul gives a hawkish rate cut, I mean they're going to cut rate other subsequent time, right? In the next future, right? If it gives a hawkish rate cut, I mean the dollar will rebound. But if it gives a dovish tone or a dovish language, right? That means the dollar will dump, fall down to the downside, right? Yeah. So dollar is going to be bearish, gold is bullish, JPY is bullish, right? Yeah, JPY is bullish. So for the yen, for the JPY index, right? For me, I think it has been on the support, right? Yeah, it has been on the support. So I would likely buy the JPY from here, right? A move to the upside from JPY means all the yen pairs, right? Because the probability of hiking rates in this month is 90%, right? That means I should be bullish on JPY. That means GBP JPY should be bearish, right? We're expecting GBP JPY to be bearish, right? Yes, CAD JPY should be bearish, right? Yes, CAD JPY should be bearish, right? GP JPY bearish, CAD JPY bearish, right? Yeah, CAD sorry, GP JPY bearish, CAD JPY were spared this of bearish. Now, there was something that happened that Friday. I'm so surprised. Why on earth will CAD buy, right? Yeah, but that's what I'm not interested in right now. Right. So NZJPY, we're expecting to be bearish, right? We're expecting NZJPY to be bearish, or JPY to be bearish because of this whole thing, right? So let us wait and see. Euro JPY to be bearish as well, right? Yeah, so let us wait and see. Investors will be pricing for rate cut, right? Yes, but let's see how. In my own community, I'm going to do detailed analysis on this, right? Give some reasons why, and some you know, analysis deeper than this, right? So I'm going to do that, right? Yeah. So, but at least you've gotten the bias for the week and all of that, right? So that's not an issue, right? Yes. So for anything that to do with JPY pay for me this week, I'm going to be bullish on JPY because 90% of rate hike, right? Yeah, that means all the JPY pairs I'm going to be bearish, right? So I'm going to look for a very good level to sell them from, right? Yeah. So that is it for me this week, right? Yes, so let's see. Mm, dollar index, right? So this bullish move one is no longer necessary, right? Yes, we are looking for a push to the downside, right? We're looking for push to the downside. So let's wait and see how it's holding. For me, I'm not seeing any technical patterns here on that. For USJPY analysis I did on Friday, yes. So price from here, price rally from this place. So we're expecting USD JPY to fall from here, right? Yeah, USD JPY to fall. Why for GBP USD we're expecting a rally. So for me, I'm going to wait. I'm going to wait for price to trade above a certain level. Let me see. Let me go downward. Um, mm, Okay, let's see how the week progress, right? So I'm not really seeing any good technical patterns here because I'm bullish. We're bullish on all of this, right? But they all give it bearish this thing because of last week move. So let's just wait if the market trades above this level, I think, right? Yeah, we can easily uh look for a push to the upside. Yes, a push to the upside. From looking for a push to the upside from there. USD card, I'm not interested in USD card, right? Yes. Why this? I'm bullish on this, okay? Bullish on this. Let's see. Oh, dropping here for going up. Nah, that's not true. That's not gonna happen. Let me see gold first. I'm bullish on gold. So this level, gold has not break this level all this while. So two analysis, right? I've played out this and this, right? So for gold, let's see if gold comes to this level again. I think we can easily buy it to the upside once more. So let us see, right? Yeah, gold has been on this support for some time. So let us wait and see what happens, right? Yes, so let us not forget this week is FOMC, right? Yes, so that's it, right? So maybe within a week, good structures can come up for us to for me to do more technical analysis and get some trade setup, right? So that's it for me this week. We are bearish on dollar, right? So dollar has been bearish, right? Yeah, gold bullish, USJPY um bearish, GBP USD bullish, Euro USD bullish, USD card, amount of it negative, negative, but based on interest rate differential, card to be bullish, right? Yes, Aussie dollar bullish, Kiwi dollar bullish because we're on risk on market sentiment, right? Yeah, so that's it for me this week. Have a lovely week ahead. So if you're not subscribed to my channel, can you like, subscribe, and comment? If you have any question, you can chat me up on Telegram, at FTS Pips or FTS Forest Hub, right? Yeah, so that's my Telegram uh channel, right? Yeah. So my training is still on fundamental analysis, right? Yeah, so that's it for me this week. Thank you and have a lovely week ahead. Thank you.